Hello, happy week 130. We got the background today with me hanging out with a bunch of people. This happens to be a bar called Mascot Brewery. And I'm not going to lie, I'm going to do a little shameless promotion because I am one of the partners at Mascot Brewery. So if you ever get a chance to go there, we have a location on King Street and a location at Etobicoke where we actually brew the beer. Great food, especially after J Games for the King Street one or before J Games and stuff like that. Anyway, quick promo there for Mascot Brewery. Give it a look when you get a chance. So, our Memoriam here, we got week 130 weeks in a row of reporting since COVID began, March 2020. And some interesting news this week. I wouldn't say interesting, but it seems like buyer sentiment is really improving out there. I think on the heels of a rumor, which I guess was sparked by the opinion of a CIBC analyst not an analyst. He is something, not an analyst. I can't remember what his actual term is. He's not one of the economists, but a strategist, perhaps. Anyway, whatever his name is. A CIBC employee, a high-level employee, who put out a report saying that the Bank of Canada is going to halt the rate hike cycle. You can read the article. You can Google it. I have it on the blog, hyperlinked in the blog. You can check it out there as well. So what he said was, he believes that the Bank of Canada was going to announce on September 7th, which is next Wednesday, a week and a day from today, they're going to announce the end of the rate hike cycle. A lot of realtors went on to say that there weren't going to be any more increases this year. That is a lie. That is not true. There may be an announcement that says they're going to end the rate hike cycle. I don't think that's going to happen, and I'll get into why in a moment. But even if they end the cycle, they're still going to have an increase of likely 0.75 basis points on September the 7th. So ending the cycle can be announced, but of course there will also be an increase on that day as well. So it's not like there aren't any more increases if that actually happens. And there are two more rate announcements after that, in October and in December. Or is it November and December? Whatever. I'm getting all my things confused today. It's been a busy day, excuse me. So, first of all, I don't think there's a single chance that the Bank of Canada goes against the US Feds. The US has made it very clear that they're going to continue with their quantitative tightening, meaning making it harder to borrow money by increasing interest rates, etc. The Bank of Canada usually doesn't go against the Fed. So, I don't think that's something that's going to happen. And let's remember, this was an opinion of one person at CIBC, not a general consensus. So if you're a realtor and you're watching this and you made a video saying, look, buyers get out there, they're going to end the cycle and there won't be any more increases, you might want to delete that content because it's not true. Even if there is an end to the cycle, there will be an increase still. But again, I am predicting another 0.75% increase on September the 7th. Perhaps there won't be any more beyond that, but there could be another quarter point or whatever it is at the next announcement. I do believe, however, that they will end the cycle in 2022. In 2023, they're going to start, what I believe will happen is rates will start to be pulled back once inflation gets under control. We had 1 month of a decline in the inflation rate, mainly due to gas prices coming down. But perhaps that can happen again and again and again, 3 or 4 months in a row. Then we have something to talk about. But right now, anybody expecting there to be a halt or no further increases, check yourself because there will be further increases, halt or not. So hopefully I drive that message home. Anyway, week 130, and just to refresh your memory in case you're new here, this is the only report, the only real estate team that is covering Toronto's urban markets, very specifically our urban markets, at this level weekly. Nobody else is doing this. Everybody else is regurgitating Toronto Real Estate Board information that comes out monthly that is already out of date by the time it comes out. So you need to be paying attention to the numbers that I'm talking about here. So I'll just dig into some right now. Here's my beautiful face right there. This is Katie Hutchinson. This right here is our Durham specialist right here. You'll meet her soon. If you're following our Instagram, you would have seen the welcome note there. Of course, this is Ryan Wykes, real estate superstar, over there as well. So what do we have here? Let's talk about something very important. Now, how do I do this? You know, it worked before. There we go. And let's move that over there. So what we have going on here, week 130, are we done with the hikes in September? Obviously, I just went through that right now. Hopefully you understand that we are not done with those, whether there's a halt or not. Listings continue to pull back. This is really the news story that nobody is really talking about that I think is very, very interesting. And this, what I already mentioned about some realtors going on about how the they're hoping that it's not going to happen. No more rates will happen. So the rates will the overnight lending rate will probably end up at 3.25% after the next announcement, which is a lot higher than a lot of people have predicted this time around. But you never know where we're actually going to end up. Could be less, could be a little bit more, whatever. I dig into specifically where I got that quote from and where a lot of people misrepresented that quote. So make sure you click this through here to watch that. It's a strategist. That's the word I was looking for. Strategist, not analyst. Anyway, so this is the direct quote right here. Where did it go? We suspect that the narrative shift is coming, given that we forecast the bank will end its rate hike cycle at its next meeting in September, bringing the overnight rate 75 basis points higher. So, if you just read the headline, you would have missed this part. So make sure that your real estate agent has spent the $8.99 or whatever it is per month to subscribe to some of these publications so they can read beyond the headlines. Weird that I have to say that, but even some realtors, aka professionals, are not reading beyond the headlines, and it's infuriating. But you don't need to have a subscription because I have the Canada Today article here, which does not have a paywall, so you can read that right there. So here's what's going to happen if the Bank of Canada does indeed halt the rate cycle. I believe that the fall market will come with an almost back to normal type of attitude from buyers, in which case sellers are going to be very pleased and super happy that they no longer have to deal with all these picky buyers with small budgets and they can't give them the money that they need for their houses. Money will be flowing much easier if that happens. But again, I say nobody can predict what will happen here, but we can. There are going to be further increases this year. We just don't know how much. And here are the numbers looking at this week. We can see a little bit of a bounce back here as some bigger ticket sales happened. I suspect we'll be leveling somewhere in the 1.6s as we head into 2023 and beyond. But again, sales volume is so low now that all these numbers were based on well over 100 transactions, and we're basing these numbers on 30 transactions. So it's a very different scenario. As you can see, condos are really what people are talking about right now, what people should be talking about right now. But, remember I talked about inventory before. We have 458 active listings now. This was 625 listings barely 8 weeks ago. So listings have been pulling back significantly. Let's not pay attention to average prices. You're not getting deals across the board on everything. Some things you are, most things you're not. Prices are still relatively stable, although down from the extreme highs of earlier this year. And again, only 37 sales when normally we'd have closer to 100 in this scenario. Inventory is super low. I'll have a new update for this number next week when all of August's numbers are fully reported. But here's what nobody's really talking about. Condo average prices hasn't really fluctuated that much. We finally have almost 100 sales. Normally, remember, we'd have up to 200, so it's still 50% less than what we normally would have. But condo listings were near 2,000 units available. Nearly 2,000 units were available just 7 to 8 weeks ago. That's pulled back consistently every single week. And remember, I've talked about this before. If we had a bunch of over-leveraged panic sellers that cannot handle interest rate increases, this number would be in the 3,000s, where it was in November 2020 when people were panicking, not only because of COVID, but they were panicking because of the new Airbnb restrictions imposed by the city of Toronto at the worst possible time. Thank you, John Tory. But anyway, we should see this thing come down to under 2 months of inventory next month, which is a dangerous place for condos considering how many buyers are currently in this buyer pool here making part of these 99 transactions. What's driving condo sales? I think a lot of investors are driving condo sales right now. I think that there is a lot of investor activity in condo land right now. I think we have a tremendous amount of buyers that are finally able to neutral cash flow or cash flow a little bit on these units that were, had people in the hole like $300 to $1,000 prior to the rental market going so crazy. So still, don't get it twisted. Nobody's really cash flowing on any single unit condo purchases, but in a lot of cases, people are breaking even right now. which is really something great to see. And a break even for a single unit investment is what you want. You're going to hate, you're going to be like, oh, but I won't invest in anything that doesn't have any cash flow. Great. If you're going to invest in Toronto, show me at least $3 million to do that, or go invest in the more volatile suburban and rural communities where you can cash flow, but you're the first real estate product to take a hit when the economy turns, as we've seen. I prefer stability. I prefer neutral cash flow and equity gain, principal recapture through my tenant paying my rent for me, my mortgage for me, I mean, than having a monthly cash flow that what am I going to do with? Probably put it back into my property anyway. So I'll take security over cash flow 99.9% of the time. Thank you very much. Like I said, unless you have millions of dollars, you're not going to cash flow in Toronto. Where are we at now? I got to share my screen here. Listings are aggressively pulling back, and condos are way up. For buying activity for condos are way up. Like I said, driven by the investor market. Big week for Toronto real estate. Next week is a huge week for Toronto real estate. Honestly, the September 7th announcement is going to make or break the market for the rest of 2022. You mean I'm going to be sitting on my on my screen waiting for that announcement to come up. Good Lord, if they do announce no increase, my phone is going to pop off with buyers ready to go. But the increase is going to happen. What I meant was if they announce the halt of the cycle. But it's one of the most important announcements of all of the announcements, I believe. It's going to set the tone for the rest of the year. And I make that pretty clear right here. And the rest of the market is, fairly inactive. These communities are typically inactive, like the Rosedales, the Deer Parks, etc., are fairly inactive at this time of year, as many folks are taking some time off for the end of the summer. Pretty much stagnant in those areas. Condos are still moving well. Listings have remained relatively stable. Sales are what they are. I wouldn't really focus too much on those numbers right now until we have a few more data points to look at in the coming months, hopefully in the coming months. And where else to talk about? We've got Leaside, Davisville area still very, very undersupplied. The only community in the entire, horseshoe, golden horseshoe, is that what we call it? The GTA 416905 that has under 1 month of inventory. No other community has this at the moment. So still Leaside, Davisville, Yonge and Egg, one of the safest, most protected investments you could have for houses anyway. Condos, there are so many condos there. And actually, this neighborhood was one of the better performing ones during COVID. Don't ask me why, but Yonge and Egg, young and eligible is what we used to call it back in the day. Lots of young singles mingling around there. Who knows what they're doing, but they're buying and selling condos, and they have been for a long time, even through COVID. So we've got a ton of new immigrants coming to Toronto, and that's really keeping our real estate market going through the tougher times, which is another reason why I'm really excited about Toronto long term. They're coming here, and they're renting houses and condos, which is what my parents did when they first came here in the mid-70s. Well, most of them when they first land, or they're living with family. But 40% of them within the first year, 40% of all newcomers to Canada within the first year buy real estate. That's a pretty important statistic. It keeps the buyer pool consistently full across the board. And guess where a lot of these newcomers are landing? Places where the majority of the jobs are. Toronto, Vancouver, Montreal, some more rural communities that have other more trade-specific jobs available to newcomers. But, it's really tough to make a long-term bet against Toronto when you see all of this goodness coming our way. Birchcliff, as usual, kind of not very many sales, but very stable. It's one of the few communities that goes down to zero in terms of sales every now and then. But prices here popped off mid-COVID and have stayed up. So here we go. One thing I want to talk about for people right now, like if you're a buyer right now, like what would stop you from buying? Like when you first called me, or you first called your agent, or you spoke to your wife, parents, etc. about buying, like why did you do that? Like you didn't decide you need to make a move because you think it's a great investment. Maybe a small percentage of you did, but generally you didn't do that. Like you decided to, I'm going to put my face on here so you can see me, so I can talk directly to you. Like you didn't call me to make a move because you love moving. I'd imagine you don't love moving unless you're a psychopath. You called me because you needed to be closer to work. You needed to be closer to family. You needed a bigger house to accommodate your growing family. You needed a smaller space because you could no longer manage the larger space that you had that once had your larger family in it. You called me because you needed to move out of something that no longer was serving the purpose it once did for you. You were committed to certain things then, and you're committed to different things now. So interest rates don't come into the conversation when you're talking about what you should be talking about when making a move to and from a principal residence. You're making these moves for lifestyle reasons. Sure, it happens to be a great long-term investment. So if you buy today and your property is worth less tomorrow, it is what it is. Or if it's worth more tomorrow, it is what it is. You can't really control that stuff. You could buy a house today for $2 million, and I can sell you that same house next month for maybe $1.95 million. Did you lose $50,000? You didn't. But what you gained were all the things you wanted when you made that move. You got closer to work. You got in that school zone you wanted your child to be in. You got closer to your friends and your family. You got that bigger house or condo that you needed to accommodate your current needs. Regardless of what's happening in the world, in the interest rate, in the investment market, those needs are real and exist, and they matter. So I wouldn't go making any drastic decisions based on interest rates, of course, as long as you can afford the new payments, the higher payments that come along with higher interest rates. And remember, if you are a buyer, you need to make sure you get your pre-approval and consistently renew your pre-approvals so you are always guaranteed the lower rate. There's no harm in renewing your pre-approvals. So just go and do that and make sure you're focused on what you're committed to, not the market. This is not some tech company that could go to zero tomorrow. This is a piece of Toronto real estate that will serve you well into retirement, regardless of what's happening in the short term. So please take that as sage advice and not some realtor trying to sell you so I can make money and buy another Tesla or something like that. I do want another Tesla, but that's not why I'm telling you these things. So anyway, your motivation hasn't changed. So focus on what you're committed to. Forget about what's happening. Just make sure you you talk to your mortgage broker, you lock in the best rate and move forward with what you are committed to or not. We're here to advise either way. So that is pretty much all I have for you this week. I would really love for you guys to subscribe. I'm loving the comments coming in. It really, really means a lot to me when I see those comments come in. Love the respectful conversations that are going on. If you watched last week's video, you know that there's no time for that negativity out there. So if you've got that, you could screw off and unsubscribe. But everybody else, I love you. Thank you for the attention, and I'll see you in week 131. Take it easy.